Hey guys, it's Tokyo here, and today I'm going to show you how to figure out which direction the market is going in. So guys, one of the most toughest issues that traders are facing these days is being on the wrong side of the trade, not knowing which direction to actually take the market. And I'm going to show you guys how I figure out where to take the market. Now, I'm not good at predicting the market, but I'm pretty good at reacting to it. So we're on the monthly time frame. This is where I like to start, on the monthly time frame. And guys, move your charts around, right? Move your charts around so that you can understand it. When the chart is really spread out, it kind of looks sideways. So if you have to, move your charts around. As you can see, we're on a downtrend, right? We've been making lower lows, lower lows, lower lows. We've been taking out a lot of sell side liquidity here from the previous months, and we actually tapped into an OB, a monthly order block. We have this institutional candle here. We had a lot of imbalance, and we tapped into an OB. So this is our monthly OB. Market has been headed down. We're going to go ahead to the weekly. The first thing that I'm going to do before analyzing anything is refine this area. And when I say refine, I mean make smaller. So now we have this refined OB. And as you can see, when price came into this OB, we pushed up with this big candle right here, right? So this is the weekly time frame. Guys, automatically, I'm looking at this institutional candle. Prior to this wick down, there was imbalance, right? Earlier this morning, you would notice imbalance. Immediately, guys, this is a weekly OB, right? This is a weekly order block. So we opened here. And if you're in my private group, I did let you guys know that we were taking out previous day's high and we could see some bearishness. Let's go down to the daily time frame. So this is the first thing that I'm seeing upon looking at the weekly. I'm checking out last week. Last week was mainly bullish, and I'm checking out this week. We did take out last week's high, and I'm seeing that bearishness that I was talking about. So guys, we're here. This is that weekly OB. If you want to mark it out, you can. So we have this weekly OB here. And this was also buy side liquidity, right? This was a previous week's high, which was taken out. Price came back down, tapped into that high, which we have here. So this was also buy side liquidity. The market came up past this, right? Made a new high, right? This high is higher than the previous high. We have a new high and made a higher low, right? And we're expecting a higher high possibly, right? If we're following structure. And guys, what am I noticing here? That we have a new institutional candle, which means we have a new daily OB, which is here, which perfectly lines up with our weekly OB, right? Price taps into it, pushes up. We have this closing of this candle here. This was the previous day's, I'll just go ahead. This was the previous day's high. Price comes up and takes out the previous day's high. I'm gonna change that color there. So price comes up, takes out that previous day's high. And I'm also noticing something else, guys. From this little area right here, we have a supply zone, right? So we have a supply zone and we have this weekly OB. We have this daily OB within this weekly OB, right? So price is kind of doing something like this, right? Price is simply doing something like this until it makes a break. So sometimes it's not that you don't know which way the market is going. Sometimes there's not much of anything happening, right? The market is kind of in a range from supply to demand. And so I'm gonna hop down. I'm gonna show you, I'm gonna also mark the previous day's low, right? Because this is also within the daily OB, and it definitely can be a target. right? So we took out that high, we had some rejection, bam, right? And it's Friday, may not happen before the market closes, but we're gonna head down to the 12-hour. So now that we're in the 12-hour, this is that little supply zone. And as you can see, guys, price keeps coming into this area and rejecting. And if we're refining areas, guys, this is that demand zone that price keeps coming into and pushing up. So guys, we are trading from a supply to demand zone. We're currently trading from supply to demand. Are we noticing that? So the market is not confusing, but guys, you just have to go to the higher time frame and really figure out what structure is, point out your supply and demand zones, right? And figure out where you can possibly take an opportunity. So the minute that price came up back into the supply zone and took out this high, I was looking for bearish opportunities. And that's what I did. I took a bearish opportunity. When price came into this demand zone, guys, I took a bullish opportunity. We have targets. We have previous days high, previous days lows. This is buy side and sell side liquidity, right? And I don't even need to go down to the smaller time frames besides looking for those entries. And, but the higher the time frame, the less noise you have to deal with. So let's just continue down to see the bigger picture, right? We have our zones. I'm not gonna move these zones, guys. I'm gonna leave these zones right here. They're gonna stay. This is that supply zone. This is that demand zone, the previous day's high, the previous day's lows, and we're gonna continue to travel down. We're seeing the same information, right? Simply, it's like ping pong. We're seeing the same information. So where do you guys assume that the market is going to continue to go to? Back into this demand zone. Could we possibly come down and take out the previous day's lows? Absolutely, right? We may come down, take out the previous day's lows. Market could not respect this demand zone. This demand zone, we may continue down, or the market could come down, take out this previous day's lows and come up and go past the supply zone, because we're trading in a range. We want to see some type of breakout from the upside or the downside, right? Because the market is definitely in a range. The market is moving sideways in this range. Traders have stops above and below, and we are trading in a range. We have to see the bigger picture from the higher time frame. Let's continue down. We're going to get more information. The same thing is happening, guys. They're just more candles. We're coming from the supply zone down to demand. Supply, demand, supply, demand. This is the 1 hour now. We're going to go down to the 1 hour. It doesn't change. The market is not changing, guys. We just have more candles to look at. So as we go down to the smaller time frame, we get to see a little bit more information, how we took out these highs. This was a target, right? This was liquidity, a liquidity grab. We took out these highs up here with yesterday's high, and we're coming down. And guys, we are definitely down here. We took out this low, guys, and we could definitely be headed down and take out this low and continue up. We don't know for sure if the market is going to continue in this range, but once you know what's happening in the market, you can take opportunities. The market doesn't have to be this big, scary place for you. Simply check out the market, look to see what price is doing. It's going to show you what it's doing. If this is too confusing for you guys, you need to head up to the higher time frame and get this stuff organized, and then move down to the smaller time frame. Maybe you can even set alerts on your charts, right? You can even set alerts when price comes back to supply. Look for an opportunity to sell. But in my private group, public group, I did tell people, hey, we took out the previous day's high. What could we expect? If you cannot dissect the charts in a way that you understand it, you're going to always feel confused and lost. I simply get in the charts, go from the higher time frame down to the smaller time frames. My information is not changing. The information that the charts gave me on the higher time frame is not changing. As I go down to the smaller time frames, the information gets a bit overwhelming. It's more to look at. It's more to check out. The moves are going to be bigger. But at least we know, hey, when we come into a particular zone, we can sell. Where you decide to target is up to you. This is the 15-minute time frame. Price came back into the supply zone. This could be a take profit for you. This could be a take profit for you because you know that this low, this is sell side liquidity here. This is sell side liquidity. So the minute that price came back into this range, into this area, right? Maybe it took out a previous day's high, right? And came back down. This was a target, this previous low. That's a good trade. You know, we have Asia and London session and all that stuff to look at, right? This is Asia high, Asia low. This is not where you would want to trade, right? I like to trade in the overlap between New York and London session. Price comes down here, it takes out this low. Immediately when a low was taken out, guys, I was looking for buying opportunities because this was a liquidity grab. So when this low is taking out, guys, you can target this Asia high, you can target this previous high, and you're done. Your trade is done. But you're not going to be able to see that if you can't see this. If you can't see this on the higher time frame, guys, the smaller time frame is just going to really confuse you. And we cannot change our bias every time we see a change in the candle. The market is not going to go straight up and straight down all the time, guys. There's going to be times where the market is pushing up, pushing down. As long as you are using proper risk management, you'll be okay. Be patient. Be patient enough to let your trade play out. So guys, this is how I like to figure out the market's direction. And I really do hope that this was a help to all of you. If you guys took anything away from this, please like and subscribe to the channel. It helps the videos get around to more people. And I do thank you for tuning in.